I just caught my next guest off his panel here at Freedom Fest. Axel Merk of Merk Investments joins me. Axel, thanks for being with us.
Great to be with you.
So Axel, you just came off that great panel and one thing that really stuck out was that you said that 50% of your holdings are in gold right now. Is it safe to assume you're bullish on the metal?
Well, I guess you could say so. And we've been buying gold recently. We think there's just too much debt in the world. And I don't know what gold is going to do tomorrow, but the Europeans are experimenting with austerity. In the US, in Japan, in the UK, we prefer the printing presses. And as such, I think it's prudent to have gold long term. Now, having said that, it's of course not surprising that gold has had a severe correction. If gold goes up for 12 years in a row, it goes up even more when you use leverage. And at some point that has to have a bad ending or at least interruption. And so that's why we've had the volatility. But volatility is great if you want to buy something because the weekends are leaving it. And if you think that you like gold in the long term, well, then the price is lower and you should like it more.
So 50% is a big chunk, though, Axel. Have you done most of your buying recently with the drop?
No, most of the buying we've done is many years ago. And so we first got very interested in gold around 2003. And one of the triggers that actually helped us to, that was the catalyst to re-engineer our business, was that the head of the European Central Bank at the time, Wim Duisenberg, he said that we hope and pray that the global adjustment process will be slow and gradual. And my reaction was, well, wait a second. If our policymakers revert to hopes and prayers, I got to do something. So we started to re-engineer our business. At the time, we started buying gold. In fact, I started a college savings fund for our kids that was exclusively in physical gold. And until a year ago, every year since we started that program, the cost of college education has come down when priced in gold.
Right. So Axel, how do you like to hold your gold?
Well, we hold it in kind of all the different formats. We hold it in physical, we hold it in ETF. What we haven't done much is mining companies, and primarily because of the various headwinds that have been around. And also, as many in the audience may know, that we're currency specialists. And currencies, unlike their reputation, aren't that volatile. Gold is actually more volatile than currencies are. When the euro moves kind of a cent, there's not much on a percentage basis. Right. And so mining stocks are just too volatile for me. And so when people say, oh my God, you have so much gold, well, that's about as much volatility I like to bear. And if I go too much into mining companies, and of course there's great value in some of them now, I'm not disputing that, we kind of like the pure play on monetary mania around the world, and that's one of the reasons why we hold gold.
Speaking of currencies, let's talk about this theory that there is a currency war. We're seeing the emerging market currencies under high pressure right now, Axel. What do you think of the whole situation?
Well, how many days we have to discuss them? I don't think it's a theory. I think it's a fact that we have a currency war, but it has different elements in different parts of the world. Bernanke is most unhappy in the US that we have a strong dollar. In fact, he just went out on all assault that, well, the only reason I tapered is because there was froth in the market. It sounds to me like irrational exuberance speech by Greenspan in '96. You mentioned emerging market currencies. I think they're a bit special because the weakness we've seen there of late is really driven by a chase into those markets in recent years. What happened is that everybody said, all right, the major currencies are dead, the next move up is going to emerging markets, and by the way, if you buy the bonds there, you're going to make even more money. Well, guess what? These markets are very small, not highly developed, a lot of money piled into them, and then the currencies are kind of semi-pegged to the dollar. And so people have been getting the yield, a little bit of appreciation, everybody's been happy. And now Bernanke spoiled the party, and suddenly everybody's trying to get out of a very small exit. So that has to do more with market dynamics. And what's happening now, of course, now the volatility is here to stay. And while we are very negative on the dollar, we don't think most emerging markets are going to benefit because you're taking on interest risk when you buy these bonds out there. What we do is we like to buy cash, so money market instruments, including in those countries. We think that the Asian currencies are actually much better positioned than many of the other emerging markets. But ultimately, what we will see for the foreseeable future, and that's years to come, we're going to see more volatility, and emerging market currencies might not benefit from that.
You said you're negative, you're bearish on the US dollar. Why, Axel?
Well, one of the reasons is that we tend to be very contrarian. So if anybody disagrees with what I say, I love that because that means we're not buying something that's too expensive. There's been all this exit talk in the US, and then in contrast, the biggest partner to the US is the Eurozone. Everybody says, oh my God, everything is so horrible in the Eurozone. They like to lower interest rates and so forth. Well, in practice, we're the guys still printing money. The Europeans, most people don't know, are actually mopping up liquidity. Banks are returning the liquidity they got from the central banks. And Draghi just recently said that we want to keep interest rates low forever. Well, that's nothing new. But these views have to converge, and we saw that unfold now with Bernanke saying, wait a second, we don't want to have the 10-year 260 or 270, we need it to come down. At this stage, he's only weakened the dollar, but what's happening is, as these views are converging, that not everything is great in the US and not everything is horrible in Europe, that means the euro is going to appreciate, the dollar is going to decline. That doesn't mean that everything is great in Europe. But just as Apple as a company is a great company, but you can lose money in the stock market, you can make money in the euro even with all these issues in the eurozone.
Good, great thoughts from you, Axel. Before I let you go, besides gold, is there any other investment that you're liking these days?
Well, just a couple of things I like to say is there is no place to hide, even gold. Normally you might get your ounces back, but if you're dollar-based investors, everything is volatile. Throw out that risk-free component in your portfolio. And what we advocate is be active, have a basket of currencies, and the good news in all of this is that as little as you may like our central bankers, they're predictable. So you can put your money where your mouth is, but you got to spread your eggs. We happen to prefer currencies. We like gold, and with that we can keep our risk profile contained.
On that note, thank you so much, Axel Merk.
My pleasure.
And thanks for watching our continuous coverage from Freedom Fest. Email us, newsfeedback@kitco.com, or follow me on Twitter @Daniela Camboni. Thanks for watching.